Hello everyone and welcome to another weekly Outlook video. For those people who are new, welcome to the community. Please subscribe to this channel. I normally do weekly outlooks every Sunday. So as usual, you're going to start with the dollar index. So for dollar and again, it's a new month. We're starting a new month, the month of March. As usual, when we start a new month, we want to start our analysis from the monthly time frame. And if you look at this, you can clearly see this market looks like it's been in a range. And so far, February has closed as an inside candle. We did not take out previous month high, neither did we take out previous month low. So it is just in a range. So before we proceed, I want to tell you about the 6 weeks Accelerator ICT SMC program. So in this program, you're going to have 4 weeks of learning and 2 weeks of market review, commentary, live market analysis, and also backtesting. So you're not only doing theory, you also get to have the execution part of what you have learned in class. The sessions are live, and in case you miss a session, a recording will be provided for you. So these are some of the reviews from some of our students about the program. So the program has really helped them in their trading journey. If you want to join, check the link in the description to register. So let's look at the weekly time frame. So if we look at the weekly time frame, of course, you know, so far price January took out this low, we got all this rejection, and currently price is still inside a weekly fair value gap. So we are stuck here, and you can see for the past actually 4 weeks, actually February, because it closed as an inside month, and you can clearly see how candles behave anytime we have an inside candle. You can clearly see the week was more of a range, and that is why we had this kind of price action. So generally, if you look at the direction market structure for weekly time frame, the weekly is still bearish. We are stuck inside this fair value gap. The only time we are going to get confirmation, especially if you want to see bullish moves, for bullish moves, the perfect confirmation will be after price inverts this weekly fair value gap. But before price inverts this weekly fair value gap, we are still here. However, if we look at the daily time frame, you'll see the story is different. So if you look at the daily time frame, you can clearly see already the daily time frame, the order flow is changing to a bullish order flow. So you can see we had this first move, which is a retracement to the weekly fair value gap. But then from there, price retraced to this fair value gap, got support, inverted this bearish fair value gap, making it an inversion fair value gap. And so far, we are stuck here. Now, if whatever happens on the higher time frame, you'll always see the order flow showing on the lower time frame. We've been looking for a bullish dollar ever since dollar respected this fair value gap and inverted this bearish fair value gap. That was the first confirmation that there's a high probability that dollar is going to give us a bullish momentum. So as long as the dollar is above this inversion fair value gap, there's a high probability that you're going to see bullish momentum. However, if dollar inverts this inversion fair value gap and reclaims it to become now a bearish fair value gap, then there's a high probability that you are likely to see a bearish dollar. So that is, we are still stuck here because you see, dollar has still not yet confirmed. Let's keep our fingers crossed that by the end of the week, we have definite confirmation so that at least we can start trading with a direction that is clear and not a 50-50 direction. So let's look at USDCHF. USDCHF still from the monthly time frame, you can see again February closed as an inside bar candle, inside month, did not take out previous month high, and it did not take out previous month low. You can clearly see it was not an expansion month. This month, price did not really give us any expansion, and that is why we have this kind of candle that we can see here. So let's look at the weekly time frame. If you look at the weekly time frame, still the same thing as DXY. You can clearly see there's this weekly fair value gap, and we are still price target, and then this is more of a consolidation, and this is where we are stuck. So let's look at the daily time frame. If you look at the daily time frame, you can see again price used this order block to push price higher, inverted this fair value gap, and right now it looks like price is bearish because Friday we had all this drop. Uh, Looks like actually it almost inverted this inversion fair value gap and to reclaim it to become a reclaimed fair value gap. But so far, this is what we have. As long as you're trading dollar, your leading indicator is the dollar index. So you want the dollar index to give you the direction that you're likely to see for all major pairs. And then you know if a pair is positively correlated, you know what to expect. And if a pair is negatively correlated, you also know what to expect. So let's look at Euro USD. So Euro USD and dollar index are negatively correlated. So you can see again the same thing as we closed as an inside month. Price did not take out previous month high and they did not take out previous month low. It was just an inside bar candle or an inside month. So let's look at Euro USD on the weekly time frame. So on the weekly time frame, you can see it's similar to the dollar index, but now on the opposite side. You could see the dollar index on the weekly price is bearish. For Euro USD on the weekly, you can clearly see this market is bullish and price has not yet violated this fair value gap. As of now, price is just has just tagged this fair value gap, and still because price has tagged this fair value gap, there's a possibility that we're likely to see a continuation higher, and that would mean dollar is bearish. Or if dollar is bullish, of course you'll see price will invert this and then we use this to push price lower. But as of now, we are still stuck in this range here. So let's look at the daily time frame. So as much as weekly time frame looks bullish, if you come to the daily time frame, you can see already price is changing order flow to bearish. You can see price made a low, made a retracement, lower low, and you can see also price inverted this a bullish fair value gap. So this is a situation where price is respecting bearish PDRA and violating bullish PDRA. So we are stuck again here. So let's look at GBPUSD and we'll start with the monthly time frame. Again, the same thing. You can clearly see it closes an inside month. We did not take out previous month high and price also did not take out previous month low. But you can see GBPUSD, if you're to compare it with Euro USD, GBPUSD is more bearish. So GBPUSD and Euro USD are positively correlated. So which means we want to see these pairs move in the same direction. Well, they are negatively correlated with DXY, which means we want to see them move opposite direction. So let's look at the weekly time frame. On the weekly, you can see GBP actually last week closed as an inside week. It did not take out previous week high, neither did price take out previous week low, and that is why this week we had a very choppy price action. So now, if you look at it on the weekly time frame, you can clearly see for GBP price has inverted this weekly fair value gap, but we do not have that inversion for the Euro USD and for DXY. And that is why it's important if you're trading major pairs to make sure that you use DXY as your leading indicator. Because if you look at this and just work by this and anticipate that now GBPUSD is bearish because price has inverted this fair value gap, yet DXY has not yet given us that confirmation. That analysis alone can be misleading because DXY should be used as a leading indicator for major pairs. So if you look at the daily time frame, it's so clear. You can see the order flow is bearish. Price is respecting bearish PDRA while violating bullish PDRAs. So you can clearly see on the daily time frame, if you were to look at the bias and the direction, this clearly looks like a bearish momentum. So for GBPUSD, this is the latest PDRA. We can work this for a bullish GBPUSD. We want to see price invert this, then use it to push price lower. However, if GBPUSD is still bearish, this can be used to push price lower. So let's look at JPY Basket, which is the yen basket, and we'll start with the monthly time frame. And you can clearly see price actually tagged this fair value gap, and so far you can see we have closed as a bearish candle. We've even closed below this swing low here. So as of now, yen looks really weak, so I'm just going to work with that. So on the weekly time frame, you can see we had this weekly order block, and clearly you can see price is closing inside the order block. So far, this is what we have. So if you look at the daily time frame, clearly you can see again, yen is really bearish, respecting bearish PDRAs while violating bullish PDRA. You can see price inverted this fair value gap, also inverted this fair value gap here. Currently, so far we have equal lows here, and you also have this low here. So this can be a good low that the market can come for if it's still bearish. And so far you can see we have this inversion fair value gap, and also there's this fair value gap up here. So price can likely use this inversion fair value gap to push price lower, or it can still tag this fair value gap so we can take out these highs before we get that bearish momentum. But you can see still this is still some bit of this fair value gap is inside the inversion fair value gap. So I'm not going to really counter trend this bearish momentum. You can clearly see it's been bearish, unless of course now you start seeing price giving us bullish momentum, violating bearish PDRs and giving us bullish PDRs that the market is respecting, then at that point we can think of a bullish yen. But as of now, this yen looks weak or really bearish. So yen basket and GBPJPY are negatively correlated. So if you're going to have a bearish yen basket, then GBPJPY, of course, you can expect bullish GBPJPY. But so far, GBPJPY, you can see this is what we have. Price actually tagged this fair value gap. This is the monthly fair value gap. And so far, this is what we have. So let's look at the weekly time frame. So if you look at the weekly time frame, you can clearly see price inverted this bullish fair value gap. Of course, it was tagging the monthly key level. And after getting that, you can see now there's a bearish fair value gap here, which price is actually tagged, and this is where price is. So now, of course, yen basket is what will determine what you're likely to see for GBP/JPY. If yen basket is still bearish, then anticipate that GBP/JPY is likely to invert this bearish fair value gap, and we're likely to see bullish momentum. However, if yen basket is bullish, and then expect that these will be used to push price lower. So let's look at the daily time frame. So GBP JPY daily time frame, you can clearly see the order flow. This momentum is bearish. We had all this bearish move, and so far this can either be a retracement to continue going bearish if yen is bullish, or price was just retracing to the monthly fair value gap, which has already been tagged, and then now we expect more bullish momentum. For bullish momentum, of course, we want to see price invert this daily fair value gap. But you can see so far, after having this bullish move, you can see price actually retraced to this. I can remove this. Price has tagged this daily fair value gap. If the market is still bearish, then you're likely to see this get inverted, and price will have used this daily fair value gap as a resistance to push price lower, and you're likely to see price will invert this, then use it to push price lower. So let's look at gold. You can see gold closed as an inside month, but it closed as a bullish inside candle. Did not take out previous month high and did not take out previous month low. So if we look at the weekly time frame, you can clearly see gold is bullish. We had tag of this bullish momentum, price tag this order block, and last week we had this bullish momentum. So if it continues with the bullish momentum, our draw of liquidity would be this previous month high. So if we look at the daily time frame, you can see for some time gold was stuck inside this fair value gap, and so far price has actually inverted this fair value gap. You can see we closed above it, price retraced, tagged it, and so far we have this momentum. So at this point, gold really looks bullish. So if we're going to see more bullish momentum for gold, you can see there's this daily order block. It can be nice if actually price uses this to push price higher, or the week opens and we see bullish fair value gaps getting created, and price using that bullish fair value gap to act as support to push price higher. So gold can still retrace all the way to this fair value gap here. I can allow that, so we can sweep this low, tag this, and continue going higher. I wouldn't want gold to invert this bullish fair value gap. So let's look at NAS 100. From the monthly time frame, you can see it closed as a bearish month, and so far we have this bearish order block formed. That's all we have. So on the weekly time frame, NAS 100, you can see price actually last week tagged this order block, and so far this is all we have. Of course, you can still see we are still in this range. Price is not yet completely out of this range here. So let's look at the daily time frame. If you look at the daily time frame, you can see the range is so clear. You can see price is stuck between this range high and this range low. At some point, we had all this move. I thought price would get to this high, but it did not. Instead, it just took out liquidity for these highs here. And so far, this is what we have. So you can see after we had this bearish momentum, price retraced to the weekly order block, and now this is where price is at the moment. And you can clearly see here again, price swept this liquidity, nice, took out this liquidity, and we had this bearish momentum. So right now, so far, we have an order block here. So for more bearish continuation, it will be nice if price get a retracement, we tag this, and then we continue going lower. However, if you're going to get a bullish US 100, you'll see, of course, bullish, strong bullish candles, price even creating bullish fair value gaps, and then at that point, you can anticipate bullish momentum. So that is all I prepared for this weekly outlook video. If you enjoyed this video, kindly give it a thumbs up. I'll see you in the next one.